Okay, guys, here we go. Today is Tuesday, August 28th, month coming to the end, and of 2012, around 12:50 p.m. And we're gonna go with the daily. We're gonna go with the daily photon from Elliott Wave forecast, guys. A very interesting uh, dynamic is taking place here in the U.S. dollar, and the chart that you guys see in there is the US dollar in the 4-hour chart. What I'm saying is there is a very interesting dynamic is because if you guys here, if this count is correct, you see, like I said, I mean, honestly, we should get a deeper correction here in the US dollar in the 4-hour. We should get a correction that we've been mentioning to you guys over the last 72 hours or more, that the dollar should get into these areas, which is the 50 back of the previous swing. All right. So that hasn't happened. The dollar, as you guys see here, has put back from the 3802 of the swing. And if you guys remember, last week we were in some degrees playing with the idea that the dollar can be dropping in an impulse, and this was a nest. The reason why we do say that, one of the reasons that we said it last week, is because if you measure wave, the first swing with the second swing didn't even reach the equal legs. That's always bothered me when the new trend do not reach the 618, the equal legs. Usually when the market stop at the 618 is on the way seat of Y. Before that, most of the time the market goes in the first leg when the trend, remember guys, this is a new trend in the dollar. Usually the C-way goes to the equal in the first leg down. All right. So that didn't happen. Another thing that didn't happen is that measuring the first three legs, 1, 2, 3, the market didn't even went neither to the 50 back. Another possibility of a nest. You see the first one to the 618, the second one to the 50. So do not discount the possibility of a nest. We have been mentioning today in the room the possibility of the nest. And then if we take a look at it, for example, at the dollar in a biggest picture, like in the daily, we are favoring this idea, the idea of the double zigzag, right? We are favoring that idea. But the dollar can do something different. Also, when the dollar can do and then it's either one of the two structures and before the dollar become bullish. It's either one of the two structures, do not matter the way it is. Do not matter how you get to 4, is that you're gonna get to 4. So technically, this is a possibility, a 5-way swing, a regular ABC. Remember, in an ABC regular, it goes like this. Which is 2 sequence of 5 ways. it's going to be like that, or it's going to be, the other one is that for this swing, it's going to make this and then lower in 3 ways. All right? It's one or the other. If it's going to get with this one, it's the count that we're showing most of the time is this one. But like I say, this one didn't correct deep enough this one. And now this one didn't correct deep enough this one, which can take you guys to discount, which is that the dollar then is doing a 1 2 1 2 1 2, and then that's why you guys can see that it went to the 2.618 there in the bottom, and that's why you can see that right now it's in the 3802. If that's the case, you gotta keep favoring the downside, because technically you got 5 swings. 1 2 3 4 5 swings. All right? And then the only thing is that the dollar is going to become a much better and easy trade, because all you need to do then, if after this low, all you're going to be able to do is selling. Then after this low, you sell the 3802. When it does the next low, you sell the 3802. The dollar becomes an easy trade. All I'm saying is that the idea that the dollar here makes a new low doesn't go well with me to count that the dollar has finished the double zigzag. If the dollar makes a new low here, I'm going to switch Elliott Wave count to discount. And we're going to become even more bullish of the US dollar. I mean, that's the way, honestly, that I like it, because I always follow the same correlation of Fibos in Elliott Wave. For me, there is no wave 3 if it doesn't reach the 1.618 of the first leg. For me, there is no wave 2 if it doesn't reach 1%. That sometimes happen, absolutely. But you got to be smart about it. And remember, trading is a percent game. What I mean is that the times that you see a wave 2 not reaching 50% is a 5% related to a 95% that it doesn't. So you got to label like that. The times that a big wave doesn't reach the 50 back is 5% related with the rest of the move. So technically, if the dollar makes a new low without getting to the 50 back, which is 92, we're going to switch to discount, and then we're going to believe, honestly, that the dollar is going to be in the middle of an impulse to the downside, and that the dollar is going to be keep going down now in a series of 4 or 5. Either way, it's very easy. This is the invalidation point to the bearish count and an impulse in a 1, 2, 3, 4, 5. This is the invalidation point. So if the dollar does this, I'm going to be a seller at the 3802 here with a minimum stop loss to the downside. So that's my humble opinion. I tend to believe that that is the case, and I think that that's the proper way. That's the proper way to look at the market. That's That's the way that we believe the market is. I mean, that's the way that I honestly like it. All right. Uh, that's the way that I like it, and that's the way that I'm gonna be playing the market. If it put back in a small degree, like in 1 hour, if the dollar in the 1 hour chart put back and goes back and does this, one second, this is the S&P 500. We were calling early today the flat, which it was calling that we got 8, and then we got, it's a mistake here. This is a flat. We were calling a flat, but that doesn't guarantee that it's going to happen. I want you guys to understand that the trend is to the downside and that we were still expecting the move to this area. And, oh, this is the correct count that I did for someone on the run. So technically, we were expecting the flat here. To complete the B wave. Now, if the flat is denial and then the dollar break this low before breaking this high and going to 82, I'm going to switch completely the Elliott Wave count to the bearish count, and I'm going to go with that scenario in mind. So any question that any of you guys have about the US dollar? Any question that anybody has about the US dollar there? It's very simple. In my humble opinion, it's either one or the other. And I mean, bottom line is that it's creating separations. And bottom line is that if you take a look at it right here, from here, the low was the 2.618 there. And then also the retracement was the 30 to the pit. So there is a chance that this is a 5-way move from here. All right. So that's very bearish because that still is telling me that we are within the 5th swing. In other words, if you take a look at the RSI, the next is perfect right there. A low, a high, a low, a high, without breaking the previous high. Without breaking the previous high. So the next is perfect. And now the market should do this, should put back again, lower, things like that. I mean, it should do a series of 4 or 5 if that being the case. Anyway, if that being the case, the next low in the dollar should count around the 80.51 area, most likely. Maybe we ending wave 1 or 5. And then from there, we're going to see most likely a pullback. All right. So it's a matter of times. Believe it or not, like I was explained on the weekly video or seminar, don't remember, that we say, if this high, if this high was taken before reaching the 50% back, is the bullish, the extremely bullish count that we were showing last week. It needs to get to the 50 back, guys. Honestly, it needs to, in my opinion. All right, so that's about the dollar. Exactly. That's going to change. At least it's going to change. That changed John, at least for 100% insurance. That's going to change the euro, and that's going to change the Swiss. And covering your question, those wave 3 to the cat, what those say to the cat is, don't even try buying. That's what it say. Sell the rally. Every rally, sell it. All right. So those wave 3, exactly, that's the point. Everyone, we've been waiting for the rally. We got a minimum one last week, and honestly, what does that tell you? Translate that to English. That say that the cat as a pair, as a currency, is very strong, and you have no business selling the strongest pair, the stronger currency in the market. Don't you agree? That's the bottom line. It's a hard reality, but it is. Now, got a question. Does wave 3 have to break previous wave 4? Don't understand, Caroline, what you mean with that question. This wave 3, you say? I don't understand that question. So another thing that I want to show you guys is the S&P 500. The S&P 500, sorry, you say yes? Yeah, of course, this needs to break this. It's very simple, guys. It's either this or this. Nobody can tell you which one is as of right now, to be honest with you guys. But today or tomorrow we should have a confirmation for sure. Right? Now, the S&P 500, it dropped, and we believe that more downside can take place. Now, what is interesting on the S&P drop is that this high is higher than this one in price, but also is higher than that one in an RSI, which make this a three-way move to the downside. With that in mind, translated in English, this is not the top in the S&P. With that in mind, translated also in simple English, that means that this is the count that we should be follow in the S&P 500. When the S&P 500, in my opinion, is correcting, like everybody knows already, the cycle from July 24, like the CAD, like an Aussie, every one of them. So another high should happen in the S&P the same way it should happen. And with the dollar getting extremely bearish, even though they don't correlate 100%, you got to believe that one way or the other, I mean, that's also a bullish event. I mean, a bullish event for the S&P. So another one that I want to show you guys is, let me do the 60-minute chart on the S&P right here. Let me put Let me add here. Look, this is the UK, the fix it. And if you take a look at that one in a specific, in the 1 hour chart, let me show you something. It is corrective and in 3 ways. 1, 2, 3, 3 backs, and another 3. This is higher than this one, so it's not a 5 ways, 3 backs, and 5 ways lower in a flat. Meaning, translated in simple Elliott Wave, that 3 ways out of the top makes one thing, continuation sooner or later of the trend. So the message is very simple. Be ready for a bearish dollar like we've been calling. The dollar can get even more bearish because if you take a look at the daily chart on the dollar, and let me open it one more time. Our target all over in the dollar is the 78.39 area now. We have 2 ways to get there, but the lowers, if this has become a nest, these things can get ugly, like it did right here. Look, I remember like today, it did 5 weeks. I remember like today, it did 5 weeks, 3 backs, and lower. We were expecting the feast, it never happened, but it did it. And things like that, you see, can take place, and it can be sharp like this one, guys. So still, the most traders, they are bullish the dollar, and that's good that they they are bullish the dollar. That's very good, because that means that the market is going to keep trading otherwise. So unfortunate, if the 5 ways move is taking place, traders is going to become bearish the dollar around this area, and then by that time we're going to be ready to start buying the dollar. Remember, contrarians are the one that make a living out of trading. Followers don't. They're always wrong. They always get late to the parties. All right? So get those messages. I think it's very clear. I mean, I'm trying to make the forum as to the point as I can, because I honestly do not want to you guys to be in the wrong side of the market. I honestly do not want that. I don't want you guys to be in the wrong side of the market. I want you guys to be in the right side of the market. So with that in mind, very simple, 2 scenarios in the dollar, either the 5-way move or either the zigzag. We don't know which way it's going to go. I mean, looking at the FIBO relationship, and I don't know, Louis, I believe you agree with me in this. Each correction, FIBO-wise, is looking better to be the next. 618, 50 back, 3802, 2.618. I mean, I'm lagging a 50 here, and I'm lagging a 50 here for the swing. So I tend to believe that it looks better overall as an impulse. The next low will clarify everything, and you guys won't see discount anymore if the next low happens. You guys won't see discount anymore if that being the case. All right. Now any question that you guys have. Yeah, I start to learning to think and impose. Yes, you know, you understand my thinking very well, and you know where I'm coming from. It's because the fever relationship. You see what I mean? The fever relationship, honestly, guys, looks better in an impulse. The fever relationship looks much better as an impulse. Much better. Remember, in an impulse, there is a ratio that needs to be completed. And also in a double zigzag, there are ratios that needs to be completed. For example, in an impulse, this is 561876 of this one. This is at least 1.618 of this one. And in an impulse, this is 23.36% of this one. Now, in a nest, it's a series of 1, 2 to the 50 minimum, 1, 2 to the 50 minimum, and then another 1, 2 to the 50 minimum. In an AVZ or double zigzag, this is the 51 of this one, and then the difference between the impulse and an AVZ is that in an impulse we got extension between low, when it's between this low and this high, we got extensions, and this one overlap, we do not overlap with this one. If you notice, both of them are the same up to here. The only difference is that this has more extension, and a new low here is going to create that extension, in my opinion. And then another thing is that this one went to the 618, but this one in the double zigzag needs to go to the 50 back of this one, all three together. And then when you measure all three together, that one didn't went there, but went to the 50 back of the previous one. So I tend, yes, Louis, I tend to learn or be leading in order of that impulse. It looks better if this low is taken. You agree, right? I think it looks much better. And that's the reason why you don't trade contra trend trades. This morning the flat looks better, looks good. I don't know today. And now it can go both ways. I don't sell the euro right there. Don't sell it. Don't buy the dollar. Exactly. If you take the low, it's going to get divergency. And then that's going to be creating an impulse. Next low should be the end of wave 3 of 3 if it's an impulse, which is very bearish. All right. Any other question, guys? Any other question about what we have talked here? I think it's very simple. I think that the market, it is very well defined. I mean that the account is very well defined, the market, and all we need to do is wait. If we got fill on the 2440, no, not yet, Bear. You don't take the order off the table until it's invalidated. That is a viable count still, and a viable area still. Everyone was, I mean, no, you leave the order there. We're going to know when we can take it away. Yesterday, I was talking to ZZ, and I was mentioning about a person in Twitter that he loved to say and show every count and showed levels and other stuff. And I was I was telling to succeed and say, man, why people love that? I believe that 2440 become too popular in the way as 22 becomes popular the way before. And they know what people thinking, guys. And they won't give it to you so easy. They're always going to go the hardest way for you as a trader. Think about it. That's the thinking that everyone should have. All right? Okay, guys. So any other questions? I got 2 more minutes with you guys here. I got to switch language and do the Spanish one after. I think it's clear. The forums now are going to be like this, 45, 30 minutes, to the point, and easy to get the message. The message is, yeah, you can watch the Spanish one, every one of you guys, if you want it. I was recommended the Spanish guys to watch the English. They're going to learn English, Spanish. You guys can do it otherwise. Contact Elliott Wave Forecast Spanish, John, for the link. Let me put the link of the Spanish one right there. 1 second. But it's very simple, guys, in my opinion. Both counts are still possible, and all you have to do as a waiver is wait to buy the trend, either at 124.40 or around 125 when the next leg down happen, if it's going to be an impulse. As simple as it gets. As simple as it gets. I don't think that I can put it clearer to you guys than that. All right? So, okay, guys, 125. Let's leave it there. Let me take a glass of water. Sirius, I send you something on email. All right? Check it. Okay, guys. See you guys recording as soon as possible also.